Tesla's getting hit with a big downgrade to underweight from equal weight over at Wells Fargo, citing numerous headwinds ahead. The firm expects volume to disappoint and also lowered its price target from $200 a share to $125. Here's the analyst who made that call, Colin Langan. Phil also on the line with us. Colin, welcome. Good to see you. I'm curious, what is the market share of Tesla in the U.S. Among total automobile sales, auto and truck sales, and among EV sales? What kind of share do they have?
I mean, they're very small into the overall market. I mean, they're very large in EVs. I mean, what we're seeing, and that was the point of our report today, is that we're actually looking at the impact of the price cuts are surprisingly low at this point. We saw volume actually, if you look at first half to second half globally, up just 3%, and pricing was down 5%. And that's really what driving our lower deliveries. We're expecting deliveries to be about flat this year because we're really expecting more limited ability to cut price. Otherwise, you're going to hit a point where you're not very profitable anymore.
So you cut price, you hope volume will increase, but you're not seeing the kind of volume increase that is commensurate with the price cuts. What about this Model 2 that they expect to bring out in 2025? Is it going to be a game changer, or is it too little too late here?
Well, I mean, I think that was the other part of our report today. We were looking at the potential for Model 2. I mean, and one of the things that really is concerning to me is that it's different from other launches. This is a mass market priced SUV. That's going to be very tough to do. I mean, the actual, if you go to an internal combustion engine, compact vehicle today, they're not very profitable. You add on an e-powertrain, you're probably starting off at a losing point. And then if you're then really betting on this unboxed production, which is the new manufacturing methodology they plan on launching with the Model 2. That's a bit of a wild card. It's just never been done before, and we still estimate you need most of those benefits to come through to get this to profit levels that we're seeing on their current vehicles.
What does unboxed production mean? I noted it in your note, and I wasn't sure what it meant.
Yeah, I mean, it is a new term. No one has actually done it before. So the idea is it's a change in the entire assembly line. And from experts that we talk to, they're trying to eliminate all the bottlenecks, automate as much as possible. The vehicle won't run through one line. It'll actually be assembled in different subcomponents and then come together at the end. This enables, one of the potential benefits maybe is you could put more throughput through the paint shop, which is the bottleneck today. But also you probably could automate more along the line and eliminate some of the manual inputs. So it's supposed to improve your efficiency. What we found in our report is that, there's probably between labor and fixed costs that are absorbed per the vehicle, it's probably $9,000 to $10,000 per car. So if you could double that, there's like $4,000 to $5,000 in benefit. You really kind of need most of that benefit to get Model 2 to probably profitability given the powertrain costs you'll be adding.
Phil?
Hey, Colin, it's Phil LeBeau here. I'm curious, when you look at all of the headwinds, not just for Tesla, but for electric vehicles overall, what do you believe is the biggest one right now? Is it the fact that we're not seeing enough models at the lower price points that would drive sales? Is it the concerns about range adoption or range anxiety, charger anxiety that is out there? What do you think is the number one headwind?
I mean, I think number one has been pricing. I think it's, and I think it's just the price. I also think we need sort of SUVs too, so I'm not sure a small vehicle actually necessarily addresses that for what Americans want. So I think one, people want more affordable EVs, and then two, it's always been charging. But the one thing we talk about in the industry, and one reason we're cautious on all of the Detroit 3 as well, so we're pretty cautious on the automakers right now, is the fact that there's still regulations coming. So the industry is going to be a really tough spot here because the automakers are going to need to sell more EVs to hit those standards, which means everyone's going to be forcing these vehicles into the market, which is never very good for profitability when that happens.